And the K.Kwanza Alliance has listed the Ukraine war, global inflation and high interest rates sparked by COVID-19 related global supply chain bottles as the precursor for the country's high cost of living. Now, these are among three factors the alliance is blaming for the spiraling food prices and the high cost of living. And Asamogina reports on what the alliance is describing as the causative agents of the country's perfect economic storm.
The cost of living has been at the epicenter of the K.Kwanza Alliance, but despite pegging the skyrocketing food prices on the handshake for derailing the Jubilee Big Four agenda, the alliance appears to be changing tune. In its manifesto, the alliance says the country is walking through what it described as a perfect economic storm. A storm it attributes to both internal and external factors. Globally, the alliance claims the Ukrainian war and the net effect of COVID-19 pandemic are to blame for the surge in prices and shortage of critical commodities, including petroleum, edible oils and fertilizer. Key factors and drivers of the economy critical to the prices of basic commodities. The rise in global inflation and interest rates has also been singled out for making the payment of the country's foreign debt expensive, with investors unwilling to roll over Kenya's bonds upon maturity.
The challenge of cost of living is increasing agricultural productivity, period. This whole story about Ukraine and all this is a lost cause. If we had not withdrawn the fertilizer subsidy that was there in our Big Four plan, we wouldn't be in the crisis we are in today.
Locally, the K.Kwanza Alliance says the country is in a financial distress, which has a negative impact on the economy. In its arithmetic, the alliance says the country is swamped by debt and interest against a struggling revenue collection. That, in fact, while the interest is capped at 660 billion shillings, with the total debt of over 1 trillion shillings, the government revenue target was an ambitious 2.1 trillion shillings. This giving the country little or no breathing room, whose wage bill is capped at 550 billion shillings. The K.Kwanza Alliance points at a skewed economic structure for the country's economic turmoil. The alliance stating the country invested in capital-intensive projects which have little or slow multiplier effect to the majority of the citizens who are left impoverished. The alliance has singled out the standard gauge railways and the Nairobi Expressway as projects that have gobbled up billions of shillings but with little net returns to the economy. Equally, a rise in the importation of food items to the country is said to have exposed the country to the masses of the merchants and traders. The alliance indicates food importation has risen over the past decade from 10 to 17%, whose net effect is leaving the country vulnerable to the global food supply shocks that the country is currently experiencing.
We are spending 360 billion to import food and food items. And of course, every Kenyan knows that the price of 2 kilogram packet of unga is now 230 shillings, up from 75 shillings in 2018.
Samugina, Citizen TV, Nairobi.